Breaking news is unfolding out of Washington, and the latest development is already sending waves of anticipation across the country. Lawmakers have just approved a sweeping piece of legislation that many insiders are calling the Comeback Bill, a measure designed to put real money directly into the hands of Americans who have been struggling the most. For millions of people who rely on supplemental security income and Social Security disability insurance, this could translate into a one-time payment of as much as $3,200 deposited straight into their bank accounts. It is not speculation or online chatter. The information is coming from formal discussions and confirmed legislative action on Capitol Hill, where members from both major parties have backed a financial relief package tied to a broader economic recovery strategy. What makes this moment feel different is the speed. Just days ago, the proposal was still being debated in committee rooms. Now it has already moved through both chambers of Congress and is heading toward immediate implementation. That kind of pace is rare for any major bill, especially one involving hundreds of billions of dollars. The urgency reflects how serious the situation has become for seniors, disabled Americans, veterans, and anyone trying to survive on a fixed income while prices for nearly everything continue to climb. The goal behind the Comeback Bill is simple on the surface but ambitious in scope. Lawmakers say they want to restore confidence in the economy by delivering direct relief instead of complicated programs or months of paperwork. Rather than offering tax credits that take a year to show up or assistance that requires lengthy applications, this plan focuses on quick deposits. If you are already in the federal benefit system, the money is intended to reach you automatically. The proposed payment amount, up to $3,200 per person, was not chosen at random. According to officials familiar with the drafting process, the figure was modeled after earlier relief efforts that proved effective at helping households cover essential costs. Back then, direct payments helped people keep up with rent, utilities, and groceries when everything else felt uncertain. Lawmakers hope a similar approach will once again provide breathing room to those who need it most. The timing is also no accident. Although official reports show inflation easing slightly, many families say they still feel squeezed every single day. Grocery bills remain stubbornly high. Energy costs spike without warning. Prescription drugs, insurance premiums, and housing expenses continue to rise faster than most benefit checks. For someone living on a fixed monthly payment, even a small increase in costs can mean skipping meals or delaying medical care. Washington has been hearing those complaints louder and louder, and this bill is meant to respond directly to that pressure. Behind the scenes, advisors describe the measure as part of a larger financial restoration plan aimed at stabilizing the lower and middle parts of the economy first. The thinking is straightforward. When people with the tightest budgets receive extra cash, they tend to spend it quickly on necessities. That spending flows right back into local businesses, pharmacies, grocery stores, and service providers. In theory, that creates a ripple effect that supports jobs and strengthens communities from the ground up. One of the most notable aspects of the bill is the level of bipartisan cooperation. In a political environment that is often deeply divided, moderate lawmakers from both sides reportedly agreed that relief for seniors and disabled citizens should not be treated as a partisan issue. That shared view helped push the legislation forward much faster than many observers expected. The result is a rare moment where speed and agreement have combined to produce immediate action. The bill does more than authorize a one-time payment. It also sets aside significant funding to strengthen Social Security operations and reduce backlogs that have frustrated applicants for years. Additional resources are expected to improve customer service, update outdated systems, and help agencies process claims more efficiently. In other words, the Comeback Bill is being framed not only as a check in the mail, but as an effort to modernize the support network that millions depend on. Treasury officials have indicated that people already receiving benefits will be first in line. That includes those on Supplemental Security Income, Social Security disability insurance, and certain veterans programs. Because these recipients already have their information on file, including bank accounts and addresses, the government can send payments quickly and electronically. There should be no need to apply, register, or submit extra forms. Imagine checking your bank account one morning and seeing an unexpected deposit labeled as a federal relief payment. For many, that single moment could change an entire month or even an entire season. It might mean catching up on overdue bills, repairing a car, stocking up on groceries, or finally scheduling a medical appointment that has been postponed for too long. The psychological relief alone could be just as meaningful as the money itself. Of course, not everyone will receive funds at the exact same time. Payments are expected to roll out in phases, similar to the way regular benefits are distributed. Some people receive their monthly support at the beginning of the month, while others are paid according to their birth date. The same general structure may apply here. That means patience will be important, even if your neighbor's deposit arrives before yours. Eligibility guidelines released so far paint a fairly broad picture. Current recipients of Supplemental Security Income qualify. Active Social Security Disability Insurance beneficiaries qualify. Many veterans receiving disability or pension benefits are included. Certain low-income retirees may also be eligible, along with taxpayers whose annual earnings fall below specific thresholds. However, individuals receiving multiple types of benefits should expect only one consolidated payment rather than separate deposits. Another important point is how the payment will be treated for tax and benefit purposes. Officials say it will be classified as relief rather than income. That means it should not count against programs like Medicaid, food assistance, or housing support. For people worried that accepting the money could reduce other benefits, this clarification offers reassurance. The intention is to help, not to create new complications. As news of the bill spreads, so does misinformation. Scammers often take advantage of big announcements by pretending to represent government agencies. They may send emails or make phone calls claiming you must pay a fee or share personal information to receive your payment. These messages are fraudulent. No legitimate agency will ever charge you or demand sensitive details to release funds that are already yours. The safest approach is to rely only on official government websites and verified communications. There are a few practical steps that can help ensure everything goes smoothly. Check that your direct deposit information is accurate. Make sure your mailing address is up to date. If you recently changed banks or moved, update those details as soon as possible through official channels. Small errors are one of the main reasons payments get delayed or returned. For many Americans, this moment represents more than just a financial transaction. It feels like recognition after years of feeling overlooked. Seniors who worked their entire lives, people living with disabilities, and veterans who served their country often carry the heaviest burden when prices rise. A one-time boost cannot solve every problem, but it can offer a pause, a chance to breathe, and a reminder that their struggles are being acknowledged. Economists suggest that putting cash directly into the hands of those most likely to spend it quickly can provide a short-term lift to the broader economy. Local shops may see more customers. Utility bills get paid. Pharmacies fill prescriptions. That activity circulates money through neighborhoods and towns, creating stability at a time when many people feel uncertain about the future. At the same time, expectations should remain realistic. This is not a permanent increase in monthly benefits. It is a targeted, one-time effort to provide immediate support. Long-term solutions to rising costs will require additional policy changes and continued debate. Still, for households balancing tight budgets, even temporary relief can make a meaningful difference. As implementation moves forward, agencies will coordinate behind the scenes to verify accounts, schedule deposits, and monitor for errors. That administrative work may take a little time, but officials insist the process will move in weeks rather than months. The aim is to deliver help while it is still urgently needed, not long after the moment has passed. In the end, the comeback bill reflects a broader understanding that many Americans are simply trying to keep their heads above water. When rent, food, and medicine consume nearly every dollar, there is little room left for emergencies or peace of mind. A direct payment of $3,200 may not solve everything, but it could be the difference between falling further behind and finally catching up. For now, the best approach is to stay informed, rely on trusted sources, and keep your account information current. If you are already receiving benefits, you are likely already in the system. When the rollout begins, the payment should find its way to you automatically. And for countless households, that deposit could arrive not just as money, but as a small measure of stability during uncertain times.